know, in the trading world, it just takes one big news event to unleash absolute chaos. But here's a thought. What if the biggest threat to a broker's brand isn't actually the crazy market swings, but something they have total control over? Let's dive into that dilemma. Okay, this quote, this is a whole ballgame right here. It completely reframes the problem, doesn't it? It's not about the tech failing when things go wild. It's about the communication breaking down. And honestly, understanding this one idea can be the difference between a brand that sails through the storm and one that just crumbles.
So if you're a broker, you've seen this a million times. It's almost predictable, right? Some huge news announcement hits. We're talking interest rate hikes, NFP data, you name it, and bam, the market just erupts. We call it the volatility firestorm.
And in that moment of pure chaos, when traders are watching their stop losses get blown out or their entries slip like crazy, well, logic just goes right out the window. Emotion takes over. And guess who becomes the instant target for all that frustration? Yep, the broker. Okay, but let's try to see it from the trader's side for a second. Put yourself in their shoes. When you see your trade get filled way off from the price you clicked, it feels personal. It doesn't feel like some abstract market force. It feels like someone is actively doing this to you. And what happens next? The accusations just start flying. The very first thing you hear, manipulation. Then it gets a little more specific. People start screaming about stop hunting, this idea that the broker is intentionally gunning for their orders. And it all spirals into this, the absolute worst label you can get. It just takes one bad trade amplified across social media, and suddenly you're branded a scam broker. So this is where we have to pause and ask the big question. I mean, sure, there are bad actors out there, no doubt. But is every single time this happens really a malicious act? Or is there something else going on? Something happening behind the scenes that most traders just don't see? All right, so let's actually pull back that curtain. If we want to understand what's really going on here, we have to look at the nuts and bolts, the raw infrastructure of the market when it's under extreme stress. But before we get too deep, let's make sure we're on the same page. What even is slippage? Super simple, it's just the difference between the price you expected to get and the price you actually got. And yeah, it can work for you, against you, or not happen at all. Okay, this is what's really happening under the hood. When that huge news event hits, the big banks and liquidity providers, they pull their orders to avoid risk. So the market suddenly gets really thin. Liquidity just vanishes. That makes the spreads blow out instantly. Your order isn't being rejected, it's just getting filled at the next available price, which in a fast-moving market might be miles away from where you clicked. So here's the absolute key takeaway. Slippage usually isn't a bug. It's not an error. It's literally a feature of the market. It's just how things work when they're under incredible stress. It's a fundamental part of the game. And that brings us to the real failure here. Because if slippage is just a normal part of the market, then the problem isn't the slippage itself, is it? The problem is the giant, gaping hole where a simple, clear explanation ought to be. Think about it. Your traders are panicking, they're confused, and the absolute worst thing you can do as a broker is just stay silent. Because when you say nothing, people assume the worst. In the court of public opinion, silence equals guilt. And this comparison just lays it all out, plain and simple. On one side, you've got the trader, who's frustrated, confused, and getting suspicious. And on the other side, the broker, who gave no heads up before, no clarity during, and no explanation after. That gap right there, that's where trust goes to die. You know that old saying, nature abhors a vacuum? Well, so do traders. It's just basic psychology. When we're faced with something we don't understand, our brains scramble to create a story to make sense of it. And if you don't provide that story, believe me, your clients will invent one. And it's probably not going to be a story you like. But look, it doesn't have to be this way. Not at all. The smartest brokers out there, they don't just react when things go crazy. They get ahead of it. They understand that their most powerful tool isn't their trading platform, it's their communication. They own the narrative right from the start. So what's this proactive playbook actually look like? Well, it boils down to a pretty simple 3-step plan. Step 1, prepare. This means you educate your traders before the news even drops. Step 2, engage. When the chaos hits, you're visible, you're talking, you're present. And finally, step 3, explain.
After the dust settles, you lead the conversation with a clear, honest breakdown of what happened.
And the tools you use for this, they're all about playing offense, not defense. We're talking proactive PR, press releases, authority content. This stuff isn't just for damage control after the fact. No way. You use these things to build your reputation as a trusted authority before the storm even gathers.
Look, at the end of the day, this whole strategy is about playing the long game. It's about realizing that in this incredibly crowded market, your reputation, that's worth more than any flashy marketing campaign you could ever run.
And this chart, it shows it perfectly. Yeah, you can dump a ton of money into ads, that's that tall, skinny bar, and get a quick burst of attention. But building a real reputation through solid, transparent PR, that creates a wide, stable foundation of trust, the kind of foundation that holds up when the market gets shaky.
And that's really the bottom line, isn't it? The brokers who get this, the ones who communicate and educate, they don't just survive the crazy moments. They actually use them to make their relationships with clients stronger. They prove they're a partner, not an enemy. And that reputation becomes the best client retention tool they have.
So I'll leave you with this one final thought. The next market storm, it isn't a matter of if, it's a matter of when. And when it hits, everyone will be listening. The only real question is, what are they going to hear? Are they going to hear the story told by your angry clients, or will they hear the one that's being confidently led by you?